You ever open up a trading book, see those perfect, clean chart examples, and then you look at your own live chart and think, yeah, mine looks absolutely nothing like that? Well, you're not alone. Today, we're going to close that gap. We are going to figure out how to draw powerful, effective trend lines on the messy, choppy, unpredictable charts you and I see every single day. And that's the big question, right? Real markets are chaotic. They're driven by millions of people making emotional decisions. So no, they don't move in perfectly straight lines. But that's okay. What we're going to do here is give you the practical tools you need to cut through all that noise and find the actual trend. Okay, so before we jump into the chaos, we have to start with a solid foundation. Let's do a quick refresher on the textbook definition. You know, the perfect model of what a trend line is supposed to be. At its core, it's really just a simple visual tool. All we're doing is connecting the dots. We're connecting the peaks, the swing highs when the market's heading down, or we're connecting the valleys, the swing lows when the market's heading up. That's it. It's our most basic way of seeing which way the market is leaning. And this is what it looks like in a perfect world. In a perfect uptrend, the price keeps making higher floors or higher lows, and we just draw a line connecting them. In a perfect downtrend, it makes lower ceilings or lower highs, and we connect those. This is that clean, simple model that everything else is built on. So why even bother drawing these lines? What's the point? Well, they have two really critical jobs. First, they act as a moving area of support or resistance. And second, and this is a big one, when price breaks through a solid trend line, it's often one of the very first signs that the trend might be running out of steam or even about to reverse completely. All right. Theory time is over. This is where the rubber meets the road, because knowing the textbook definition is one thing, but actually applying it to a live chart, that's a whole different ballgame. So let's get into the 4 golden rules you absolutely have to know to make this work. Okay, these 4 rules are your new best friend. Rule 1, you need at least 2 points to draw a line, but 3 or more points, that's when you have a real validated trend. The more touches, the better. 2, you have to embrace the mess. Real trends are choppy. Expect it. 3, and this is so important, think of your line as a zone or an area, not some perfect laser-thin line. And finally, rule 4, if you have to squint and tilt your head to see the trend, it probably isn't there. Don't ever force it. So, with those rules in our back pocket, let's put them to the test. This is the masterclass section, where we're going to solve the 2 biggest, most frustrating problems you'll run into when you're trying to do this on a real live chart. And here we go. The classic problem. You can clearly see the trend, you can spot the swing highs or lows, but they don't line up perfectly. One point is a little too high, the next one's a little too low. So how in the world are you supposed to draw that line? The solution is actually pretty simple. Your goal isn't to be a perfect artist. Your goal is to find the line of best fit. You're going to angle and adjust that line until you get the absolute maximum number of touches you can. It's okay if it slightly misses one, or even cuts through another. We're aiming for the most contact possible. And of course, this leads us directly to the #1 most debated, most asked question about trend lines. Do you draw the line connecting the very tips of the wicks, or do you connect the candle bodies, the open and close prices? The answer is so simple, you're gonna love it. It doesn't matter. Seriously, you can completely forget the whole wicks versus bodies debate starting right now. Your only job, your only mission is to draw the one line that hits the most points, period. And this is what a real working trend line is going to look like. It's usually a hybrid. It might touch the very end of a wick here, slice right through a candle body there, and then catch the close of another candle later on. The goal is always the same, get the most touches you can. That's it. That's the only rule that matters. All right, let's bring this all home, because drawing the line correctly is the skill, right? But using the line effectively requires a really important shift in how you think about what that line actually is. And this, right here, is probably the single biggest takeaway from all of this. A trend line is not a brick wall. It's not a magical barrier. It's a zone. It's an area of interest. It's simply a guide that tells you, hey, pay attention here. The market has made decisions in this area before. It's a huge piece of the puzzle, but it's never the entire picture. So now you have the tools to go from those perfect textbook examples to the messy real world. You can draw a valid, practical trend line on pretty much any chart. But learning this skill naturally leads to the next, and maybe most important question of all. Just because the price touches the line, what makes you decide to actually pull the trigger and act on it? That's the next level of your analysis.